Hello, everyone. Ladislas Maurice from thewanderinginvestor.com here. So today we have a very special guest, Swen Lorenz. Sven, how are you?
I'm very well, thank you. Hello from London to Oman.
I've been following Sven for a number of years. He runs a website called undervaluedshares.com, which offers fantastic value for money. Typically, such services would be going for $500 or $1,000 a year, and his service is only at $50 a year, 49 actually. I keep telling Sven, raise your prices, but he won't budge. He wants to offer great value, and great value he really does offer. So Sven, could you please tell us about yourself?
Love to. So I've basically been investing ever since I was 15 years old, and I became a freelance journalist writing about the stock market when I was 16. I've been writing for newsletters pretty much ever since, with some brief interruptions. And as the name of my website says, I'm hunting for undervalued investments in the very broadest sense of the word. I do that on a global basis. So I look at literally anywhere in the world where I believe we can make some money off publicly traded equities. And I'm very much a public equities guy. I want to be able to press a button and buy an investment and then, press another button and sell it at whatever time I want to sell it. And I've been quite well known for my incessant traveling. I've always been very much an on the road kind of guy who goes to all sorts of countries, whether in Europe or North America or further afield, and including exotic countries and frontier countries, to do on the ground research and to meet people, meet companies as well. And I've written 2 books also about traveling the world and finding interesting investments along the way. That's been a fun aspect, and that's something that you will also, very much see on my website when you take a look at the content that I offer there.
So that's a very good point, because the two of us have like one thing in common. We both travel a lot to go look at investments. So why do you travel this much?
So to answer that, I think I need to take you back 20 years or 25 years when I started my investment career. This was a very different world at the time, and traveling for research was also quite different in terms of the results you got and how you went about it. So think back, I mean, you're too young, you can't really think back to a time before the internet, but imagine a world before the internet when annual reports were posted as hard copies in the mail, and when you couldn't just easily look up lists of which companies are actually listed on the stock market in another country. And back in those days, it was sometimes literally a matter of just flying to a country and picking up the local newspaper during the duration of your stay, and using that to quickly learn about the local stock market, and literally going through the list of companies of which the price was printed in the newspaper every single day. And by something as simple as going through such a list, you might have found a name that interested you, or maybe even a famous name of a company where you thought, I had no idea this was actually listed on a stock market. And I don't want to say it was as easy as that, because there were always other difficulties involved, such as you couldn't get an annual report, or they were not printed in other languages, and accounting standards were very different all over the world. But these were the days when going to a different country, and especially slightly more off the beaten path countries, really got you an information advantage. That's different now. I think it's still very much true for the kind of research you do into real estate. For that, you really have to be on the ground. I guess you would agree with that.
Yes, like for example, recently I went to Egypt, and I had all these preconceptions about Egypt, and I like to think I can read through the propaganda and be able to make my own informed opinion, reading various sources of information. But honestly, I was completely wrong about Egypt. And then when I got there, I saw what's happening. The country's developing. There are a lot of reforms that are being put into place, and they're interesting programs. So the country that is building a new capital city east of Cairo, it's a huge project driven by Egyptian money, Gulf money, and Chinese money. Essentially, it's Dubai, but built by Egyptians for Egyptians. And foreigners can buy property off plan for less than $500 a square meter right now. And it's possible for foreigners to even get payment plans over 10 years in local currency, in Egyptian pounds. And not only that, but if you buy, it comes with a government guarantee. So if your developer goes bust, you get the government either completes the project, or gives you your money back. And that's the sort of information, to your point, you can Google as much as you want. You're not going to find it. You need to be there on the ground, speaking to developers who then say, oh, by the way, there's a government guarantee. And you're like, really? They're like, yeah. Let me find the document. And then they give you the document. You're like, oh, really? Then you go see a few lawyers, you show this document, they're like, yeah, it's valid. And this is exactly why it's important I completely agree with you, it's important to travel to really get a feel for what's happening on the ground.
Yes, and there's that one aspect that you just mentioned, if I can jump in there, on one hand, you need to find the information. On the other hand, you need experts, human beings to speak to verify things, to make sense of it, to get a broader context. And I would say that is the work I now do while I travel. I always describe my website as primarily really a community. And I organize reader events, for example, as well. Just last September, I had 30 readers join me for a research trip in Poland. And one thing I love about my own website is it just attracts the most interesting people I could possibly imagine, and very passionate, knowledgeable investors who look at things from very different angles. And I travel to generally meet people like that. Sometimes I travel to meet some of my readers. And for example, my best stock analysis last year, which is Fiverr, which went up 900% after I dug it out. That was the result of a lunch I had with a reader in New York. We both knew the company. I hadn't thought hard enough at that stage about, writing a research report about it. And after that lunch, I thought, I should really get my teeth into that thing now. And that is a bit of a, I don't want to say random process, but it's, you just have to speak to a lot of people, and then you will eventually come across the right ideas. It's like with anything, you do something a lot, and then occasionally something extraordinary happens. And for me, traveling is basically a synonym for meeting people, picking their brain, running my investment thesis past them to check if I'm onto the right thing and to learn new aspects. And that adds a fun and very productive angle to traveling.
Yeah, and about Fiverr, any one of your subscribers that actually bought Fiverr following your report definitely made 100x their subscription fees easily.
Easily. Probably, so,
yeah. So very good ROI, I must attest. So if I may ask, what would you be looking at right now in the current environment?
So, I mean, to state the obvious, right now, everyone is looking at technology stocks because of everything that has happened since March last year. The world is undergoing this incredible and very fast digital transformation right now. And probably there's more money to be made in technology stocks, but and my subscribers have read about quite a few of them recently. There was Fiverr. I just had a very extensive report about justeattakeaway.com. I published something 2 months ago about Twitter, a very contrarian and I think quite original investment thesis about Twitter. So I do look at all of these technology stocks. But I think there's also more than just US tech stocks or European and Asian tech stocks. And one of the areas where I think private investors in particular can make tremendous gains over the next couple of years and potentially even beat the experts at their own game is tech in emerging markets. That is a huge growth sector for the 2020s. And it all boils down to one thing: productivity gains. We have billions of people in the world still living in economies that are fairly unsophisticated and fairly low tech. And by introducing relatively cheap technology, and technology gets ever cheaper and more widely available, by just using relatively cheap technology in these economies, you can make leaps and bounds in terms of economic advances and productivity gains. Imagine, for example, Africa, which has unbelievable amounts of arable land, but much of that is used in below scale farming, subsistence farming. And now all of a sudden, give people a mobile phone with access to data, give them drones to survey their land. These are not expensive technologies. And in countries like that, it's not a matter of increasing productivity by 10 or 20%. It's doubling, tripling, quadrupling productivity. And that creates tremendous opportunities for the companies coming up with these technologies, but also for the companies that are actually applying these technologies in these countries. And I'm currently researching a number of stories there. Tech in emerging markets has already had quite a run. It's not like these stocks were all cheap and you could just buy whatever you wanted. But there are great ideas out there, and new ideas will emerge constantly over the next couple of years. It's a matter of having to, be on the ball and being ahead of the curve by, again, speaking to people and trying to be a bit faster than everyone else. And I think there's lots of money to be made out of that.
Fantastic. And you've become also quite the expert when it comes to crisis investing. Can you speak about this?
Yes. So that's a theme that will probably never go out of fashion. And it's just a recurring investment opportunity, because somewhere in the world there will always be some, incredible crisis going on. Early last year, I wrote a 3-part series on my blog, on the free part of my blog. My weekly dispatches is a weekly column that I publish every Friday. And that's something that new readers can use to get to know my writing. And one of the most popular 3-part series I ever published was about crisis investing, which, as the name says, relates to countries that are emerging from wars, or that have, where the government went bankrupt, or just simply, something very, very challenging happened to the country's economy. And quite often when such a traumatic economic, political, and financial event happens, investors kind of forget about this country for a long time. And, humans are very resilient, and then eventually things start to turn around. And my favorite example is it's something that I wrote about 20 years ago, to the year exactly 20 years ago. A stock that allowed you to get into the Iraqi oil sector right after the second Iraq war. Unbelievable oil assets. I mean, in Iraq, there are areas where you can apparently literally stick a shovel into the ground and the oil comes out. Very low production costs. And that stock was something that, first of all, no one had it on their radar. And secondly, it was just trading at a ridiculously low valuation. It was trading in London, so anyone could easily buy it through their brokerage account. And that stock went up 100 times after the war. And that's just typical crisis investing. You purchase something that it's controversial. It sounds dangerous. You're probably afraid of putting your money there. But with a bit of sound analysis, you can locate these plays. And yes, occasionally it will either, take a lot longer than you think it will take, or it might not work out at all. But as that example shows, if you can make 100 times your money occasionally with an investment, that's literally all you need to make to make your portfolio go up in value quite dramatically, even if you invest relatively small amounts. And crisis investing is something that I love following with deep passion, and there's always a crisis somewhere in the world. Right now, it would probably be worthwhile to look at Venezuela. They are quietly emerging right now with market-based reforms. Someone has just issued a bond there. A private enterprise has issued a bond. The country is truly down and out. I mean, few countries have had it as bad as Venezuela in the last couple of years. And there's probably Argentina, which is a recurring crisis country to look at. They go bust every couple of years. And then, there's a very active stock market with quite a few interesting stocks traded on it. There are the bonds as well. Argentina is something I would probably look at right now again. And Ukraine, which is one of those countries that Europeans think they have a hot war across the country, and Americans, couldn't place it on a map. And sorry, no offense, but that's what it boils down to. And it's, for that reason, a country where you can get incredible value as an investor. And if I remember right, you wrote something about this from a real estate angle, right?
Yeah, correct. Literally, the best market in Europe right now in terms of yields is Ukraine. And whenever I mention it to people, people are like, oh, no, but like Ukraine is dangerous. Ukraine is risky. It's like, sure, there are risks. But when you take a step back and you look at the situation, prices have dropped, real estate prices in Kiev have dropped 75% from peak. and have been consolidating for a few years. And they've seen everything. They've seen war, they've seen a few bouts of very high inflation, they've seen devaluation, they've had mass immigration of their youth to Western Europe and Central Europe to look for jobs. They've had war in the East with Russia that's partially ongoing. And they had a big part of their territory, Crimea, that was taken away. So everything that could go wrong went wrong. And prices just don't drop any further. So it really looks like a bottom. So if you invest now, you're essentially buying into something with limited downside risk because everyone that had a weak hand already sold, and you're just waiting for, you know, the catalyst to drive prices back up again. And in this particular case in Ukraine, it's interest rates that are gradually going down and that are soon going to be below 10%. So if you buy in as an individual, you can get properties downtown Kyiv yielding you gross 7 to 9%. And there are even some funds that target some micro niches that can get double-digit yields. There you just invest in the fund and then you sit back and the dividends come through. So that's easier. But yeah, you're right. Like Ukraine is full of opportunities for people that are willing to make the jump and accept a bit of risk as well, for sure. For sure. So how do you go about researching all these exotic opportunities?
There are a couple of aspects to it. And first of all, your viewers will probably be surprised that there's a lot more research out there about all of these, different opportunities around the world than you would think. Even if you go to relatively exotic countries, there's usually one or two local brokerage firms, at least, that publish interesting and quite insightful research about the companies that are trading on the local stock exchange. Never mind, once you go to more developed countries, there's so much research out there. The problem for private investors is usually getting access to that. And either you pay for it, or you happen to be a client of that broker, or you have some other means to get through it. And that's where my website probably comes in quite helpful, because I have access to a lot of things, and I obviously can't republish things, but I source material that comes in quite useful for the research reports that I write, and I can always quote others, and I can use that to also, get more broader context, which I then pass on to my readers. But I think really the main thing that's missing, and that's what I try to generate in my work, is original thinking and idea generation that is not just run of the mill. When you think about it, anyone who has a Bloomberg terminal can basically run a filter through the database and have them spit out like the list of the 100 cheapest emerging market companies in the world based on price book value or price earnings ratio or something like that. And if it's easy, if anyone can do it who has a Bloomberg terminal, that means probably 100 people have already done it, or 1,000 or 100,000. And that means this field has been grazed over. There's nothing much to discover. And the mainstream media nowadays also doesn't really help you that much anymore in terms of generating ideas, because there is more and more, in my view, a phenomena that you could describe as much of the media is marching in lockstep. And there are certain approved narratives. As I mentioned in the beginning, I'm actually in London right now, and I'm here specifically to be in London for 6 weeks during this difficult period of continued, renewed lockdown after a very long period of having other lockdowns. And I'm here to ultimately write an article about this, and write about this also from an investment perspective. And being here in London and reading the UK media on a daily basis, I'm just astounded at the difference between what I see and what the media reports. And I can't wait to write that article. But it's just, part of a phenomena where mainstream media has its purposes, but finding good investment ideas is probably not foremost among it. And what it ultimately means for my work is that I have to continue going down that route of speaking to people, hearing different voices, and specifically also speaking to very much opposing ends of the spectrum of viewpoints. I did that recently, I think, to quite an extent with the research report I wrote about Twitter. So Twitter is right now obviously all over the media because of their banning of Trump, which I predicted. I was just 2 weeks off. I thought it was happening on the 21st of January. I didn't think it was going to happen on the 6th of January. But I spoke to a lot of people about Twitter who are from what you could describe as a metropolitan elite Guardian reading pro-censorship crowd. And I also last year went to the annual event of the conservative right-wing bloggers in the United States, where I hung out with people like Trump's favorite meme maker, Carpe Donktum, with Project Veritas, with Laura Loomer, all of Jack Posobiec, all these characters that you know. So I've been, listening to both sides of that entire story. And I think that's what you need to do to work out what is the underlying dynamic and where are things most likely going to go. You have to work really hard to, establish the truth and to come up with predictions that are, rooted on cold hard evidence and objective assessment to the degree anyone can be objective. We all live in our bubbles to a certain extent, but we can at least try to step out of those bubbles and, meeting people, trying to come up with original ideas that others haven't thought of yet. That's very much my work, and that describes somewhat my research process. Of course, the details are even more complicated, but I basically just spend the entire day reading stuff and researching ideas and then churning out these reports and articles.
That's fantastic. That's really the best approach that one can take. So I have a question from one of your readers, so I'm going to read it. It's complicated, so get ready. There's a lot in that question. So, how do you expect the world to be in 10 years? Will cities be like today? Will people prefer to live in cities or in the countryside? And what about shops? Will everything be mostly online?
Wow, that's a lot in one question. So my first question would be, does one really need to exclude the other? When you ask, will we live in cities? I mean, take me as an example. So I live on a remote island in the English Channel with just 500 people. But at the same time, I cannot carry out my job without regularly going to places like London and New York, the biggest cities in the Western Hemisphere, well, two of them, because of the network effects that you only have in cities, and you just can't do that by Zoom. I mean, I've been, surveying my friends recently about what they think of this whole running your life by Zoom. And I mean, first of all, people are really fatigued. They now recognize, and I'm not surprised by this, that if you haven't met someone you know quite well, if you haven't met that person for 9 months or 12 months, your relationship starts to fizzle out. It certainly changes in its quality. And people are desperate increasingly to get back to meeting in person. And they've also realized that something such as signing up new clients, winning over new clients, and winning over new project work is a lot more difficult if you have not met that person before. So by Zoom, you can keep existing business running, but to find new business is a lot more difficult. And I think there is a certain balance to be found. I think we will all spend more time on Zoom, and we will probably, be more active with video conferences because we've gotten used to that, and that's a great thing. At the same time, I don't see, masses of people now deserting cities and all living in the countryside and listening to the birds over there. I think there will also simply be a new generation of people moving to cities. And I think that's something where probably age comes in quite helpful. So I lived near New York in the early 1990s for a period, and New York was as down and out at the time as you could have imagined. I mean, imagine something even worse than the current pandemic hitting New York. It was, I mean, you were physically afraid to go to Manhattan. And that led to rents falling, apartment prices falling. And what happens, of course, young people who don't have much money, but who are looking for an exciting creative space, they move in. The reader asked about retail as well. Yes, of course, we're now all more accustomed to shopping online, but How boring is that to a certain extent? You can't touch things. I can't browse through books if I'm online. I want to, walk through a bookstore and touch things. Friends of mine went to Louis Vuitton a while ago, and, as repeat guests, they're welcomed by their concierge shopper. They get their glass of champagne. They're talked through the latest items. They can touch different fabrics. They get some inside information from the shopping concierge. You can't replicate any of that online. And now, of course, parts of the high street are empty, but that enables young people to finally afford a shop. They can launch a brand and they can create something really interesting and attractive. And, I'd be dying to buy products and brands that are, so new they're not even online yet, or, where I just, get to meet the funky founder of the brand, etc. I mean, there's so many ways to play this. I'm just saying, I think both will continue to coexist. We will go back to a state of, hopefully at least, to a state of relative normality. And I'm excited that developments such as, passenger drones might radically improve and shape our mobility going forward, and maybe it'll become a lot easier to zip in and out of cities on a daily basis. And people who can afford it may have, or will continue to have, a place in the countryside and a place in the city. But I don't think it'll be as big a boom for the countryside as some people think. And at the same time, I don't think cities will bleed out. I can tell you there's a lot of energy in London, and despite the lockdown, this is very much a place to be. There is, Brexit has just happened. A potential end of the pandemic appears on the horizon in the minds of some people. There's great energy in London right now for making new things happen, and you won't get that outside of the city. So there's a lot to be said in favor of it. I hope I answered that question somewhat completely.
Yeah, you did. It's good. It's an optimistic message. It's full of optimism. It's good to hear. There's a lot of doom and gloom around, and the reality is, to your point, there's opportunity everywhere. I often have people contacting me saying, "Oh, I have like money at the bank. I don't know what to do with it. There's 0% interest rates. Where should I invest?" The reality is, there's so many investment opportunities in this world. You just need to know where to look for them and to really do your research, which you've really been doing very well with your weekly dispatch, which, by the way, I really encourage everyone in my audience to subscribe to Sven's weekly dispatch. The link is below. It's on undervaluedshares.com. But I have to warn you, I think, Sven, you convert over 60% of people who sign up to the free newsletter, the free weekly dispatch, which offers a lot of great value. I think once or twice I even bought stocks you mentioned in the free weekly dispatch, but you hadn't mentioned in the paid reports, and I made money from them. So 60% of people you managed to convert.
Absolutely, that's correct. I mean, my annual subscription is only $49. I wanted my product to be available to a global audience anywhere, whether it's students in India or, you name it. So I am definitely underpriced. Probably my product is undervalued itself. So that's good for my readers. But yes, indeed, I think last time I checked, 64% eventually converted to subscribing to the product.
Yeah, this is an amazing statistic. So people who subscribe, watch out. You have a 60% chance of being upsold. It'll happen. I know, it took me, when I first signed up to the free weekly dispatch, I think just a week later or 2 weeks later, I paid up. I don't part with my money easily. Okay, Sven, thank you so much for your time. Really appreciate it.
Lovely to speak to you, Ladislas, as always. And I'm looking forward to getting together when traveling allows again, wherever that may be for the two of us.
Indeed. Cheers.
Take care. Ciao.